I'm going to address the both of you guys again. Let's back up and talk about tech investing more broadly in the context of what else has been dominating the markets, which is this rapidly changing geopolitical landscape. Todd, I'll go to you for this one. We've seen a good amount of volatility around some of the recent developments on the geopolitical front, specifically when it comes to conflict in the Middle East. It has been jarring for sure, but interestingly enough, not as jarring from a straight quantitatively volatile perspective with regard to the markets, as volatile as the tariffs impact were or was at the end and beginning of April, kind of into that May period. So what exactly do you attribute this bout of volatility to, and is tech a good enough theme to weather this kind of geopolitical risk?
So I think investors and advisors in 2025 are getting used to this being a more volatile time period than they were a month ago or 2 months ago or 3 months ago. I think they're more accepting of the volatility, but we certainly at the ETF flows level, we're seeing stronger interest in fixed income ETFs, in short-term fixed income ETFs, the earn some income and not take on much risk. And then also we're seeing people buy more broadly diversified ETFs. The Vanguard 500 ETF is on pace to again break the record for net inflows for a year before anywhere close before the end of the year. So people are using sell-offs as a buying opportunity. You asked about tech. Tech is the heaviest weighting within a broadly diversified large cap ETF like Vanguard 500 or others. So I think many people are having tech and AI as part of a broader portfolio as opposed to leaning in solely onto the technology sector.
Hey, Todd, as you look at the landscape for ETFs, there's been a time when some folks, investors out there, both on the retail and the institutional side, have viewed the tech trade or those mega cap type tech names as a maybe safe haven, if you can even call it that. But they were relative safe harbors in some stormy conditions. Does the tech trade from that mega cap level still appeal to some investors as a relative safe haven trade, or does it expose itself to even more volatility now because it's run so far so quickly in the past 10 or 15 years?
So Dan is going to have more of a valuation call than I am, but we're certainly seeing that investors that gravitated towards tech, in 2020 when we had the COVID sell-off, technology was the safe haven. That was the lowest risk part of the marketplace. Now we're seeing a flight to safety in the equity markets in some of the more defensive sectors, utilities or consumer staples. So tech is a relative safe haven, or I guess large cap tech is a relative safe haven, but we are seeing investors want the benefits of diversification with some of those more traditional defensive sectors.
Dan, because we broached that topic and we opened the window or door a bit on this, the valuation story. Mm-hmm. What do you say to folks out there who believe that this tech trade, after having the run that it's had, is now not as much of that quote unquote relative safe haven trade, because you would have wanted to be there 3, 5, 7, 10 years ago and not necessarily today?
Yeah, I mean, look, Don, me and you have talked about this for decades. I mean, my view of tech, if you focus just on valuation, you missed every transformational tech stock the last 20 years. And I believe the market is it is massively underestimating what the growth is going to look like for the AI revolution in tech. So I believe valuation, okay, over the next year, you could say some of these are expensive. You look at the next 2, 3, 4, 5 years, given our view of autonomous, robotic, that's why I think we're going to be talking about NASDAQ 20,000, 25,000 over the coming years. And that's why any type of geopolitical sort of events, we always view as opportunities to own these names cheaper. That's kind of always been our view the last 25 years covering tech.